All right. Hello, everybody. Welcome back to another episode of Tech Bros. We are live. It is Monday, November 3rd. And in about 2 days on Wednesday, we are going to be getting Robinhood earnings for Q3 2025. So this episode is going to be pretty much dedicated to those earnings. I think if we have some time, we'll talk about a couple other topics, but Robinhood is going to be a very important topic for today. Roy, Tanner, how you doing?
Well, it's always an exciting time.
Yeah, I'm doing well as well. Yeah, really excited for Wednesday and Thursday. These earnings are just packed, man. This is going to be the busiest week, probably busier than next or busier than last week. And Robinhood, of course, is on Wednesday, so that's going to be an exciting one. And I don't know, is that or Chime for me? I was going to stream one or the other, but I thought, hey, you know what? Might as well do Robinhood. I'm on the earnings call, so no, I'm kidding. But dude, I hate the fact that Chime has to be on the exact same day. I hate the fact that I want to stream both and I can't do it the same hour. Even if it was 5 and then the other one was 6 to 7.
Are you actually complaining that you don't have the privilege of streaming Chime on the day of Robinhood? Is that what I'm hearing right now?
Bro, I'm telling you, I think there's going to be a pop.
No, even if there is, are you more excited for Chime earnings than Robin freaking Hood? Like, I don't even get that.
I think there's going to be a pop.
Okay, Vlad, if you're listening, this man doesn't deserve an invite anymore. He's not an American anyway. He doesn't have the Robinhood app. I'm just kidding.
I'm excited for Hood. But you know, I think the fact that they show all the monthly numbers takes away a little bit of the anxiousness of seeing earnings.
Though this one, and we'll get into it, there's a lot less that we know this time just because the nature of the new legs of their business, including the predictions market. So, and the expectations are really high too. So, by the way, before we get into the Robinhood stuff, can we just pause a moment and reflect on how amazing Palantir is as a business?
Yeah. I mean, I'll let Tanner give his thoughts because he was listening to the call as well. But Tanner, what'd you think of the quarter?
I mean, just nothing shy of like perfection. They are an insane business. Like, I don't know if I've ever seen execution like this from any company. 63+% or something like this for revenue. Net dollar retention is not only growing, I think it got to 134%, but the rate at which it's growing has increased every quarter for like the last 6 quarters. Like, it's crazy. That is not normal. So I obviously still don't think the fair value of Palantir is in the $200 ranges, but every time I see their quarterly numbers, it increases. And I'm like, wow, you know what? I would buy this company at a much higher price than I would have last quarter. And that seemed to have happened the last 6 quarters in a row. So maybe they are worth 200, but you have to kind of discount that out into the future.
Yeah, they're super expensive. But if you were forced to go short on 2 companies, would you pick Palantir and Nvidia to be short
on? No, I think that's insanity. And whoever did that was probably brave enough to short the entire housing market. So I mean, he likes to take big bets.
They're talking about Burry because he disclosed it's a put position. It could have been closed by now, but it was in Q3. But then, even more interesting than the disclosure of the put position, look at what Burry's tweeting an hour ago. All these pictures of basically CapEx growth rates matching tech bubble of 99. NVIDIA and OpenAI are essentially giving money to each other. I mean, the sort of conventional bear arguments that a lot of us have been hearing over the past couple of weeks, Burry is on board with all those arguments based on his latest post. And I guess we can have a little bit of this conversation right now before we get into Hood earnings. Roy, in general, what are your thoughts on the most infamous short coming out and basically saying AI is a bubble?
Yeah, so there's 2 reasons for that argument. One is a little bit of that cyclical revenue, which there's a little bit of a merit to that, where if like Sam Altman is really scam Altman and is ripping everybody off and it's not real what he's building, which I doubt, because there's a lot of scrutiny on that company. But if it is, then that's a domino effect. Now, it's not going to cause a massive crash, but it will have a pretty big impact. But a lot of people are trying to compare this to 1999 too, partly because of the price action. But we have a really different setup here. Like, in essence, if you look at the companies that are spending the CapEx, are these companies that are just burning money and have no real revenue or just a little bit of one and don't have actually any real earnings? No, these are some of the most wildly profitable companies in entire world history. And they're so ridiculously profitable, they can infinitely burn money on CapEx and be perfectly fine. So this is not the dot-com bubble by any measure. Also, the way that tech has ramped, it's going to take a lot less time for AI to really deliver ROI. Now, we've seen it with Palantir, certainly, and with NVIDIA products and those that are using those products, than was the case with the internet when it was relatively novel. So I think he's just wrong by every measure. What he's right about is there are some expensive names out there. Palantir is one of them. I think NVIDIA, like, calling it expensive is overlooking probably another 100 companies that you could say that over NVIDIA. I think that's even dumber than Palantir, honestly. And I don't know a lot more Palantir than NVIDIA. And if you were going to be negative and say that there's a bubble in some of these areas, private equity, there's probably something to be said on that. But also, like, why not pick quantum? Why not pick, some pre-revenue companies that are very similar to what we had in the dot-com bubble, and that are mostly just names. I mean, they're more than names. They're trying to do some real things. I don't know whether or not to believe in quantum, and I wouldn't short it personally, but I don't know. It seems weird to pick two of the most impressive companies. And yes, Palantir is richly valued, but I am guessing he's picking Palantir only because it's richly valued, which is the dumbest reason to go short on something. So I think this is reckless. Maybe he's already out. If not, he's in for a lot of pain, or he has been so far. He could also time it for, maybe it's just a macro event where he's like, hey, we're going to have a pullback. These names will pull back more. But we saw at least how Palantir performed in April. It did a lot. It didn't do great, but it did a lot better than almost even bull was expecting it would perform in April. So I think he's short-sighted. I think he's wrong, and I think he's offsides.
Yeah, I mean, the whole thing seemed a little weird. He published early. He tweeted about it. He never tweets. He deletes all his tweets. So he tweeted about it, disclosed it 11 days early. He calls everything a bubble. He's been calling multiple bubbles. So if people think that, every decision that Michael Burry has made is a success, is actually quite the opposite. I actually think, like, for the most part, his success rate is actually quite low on these short calls. And so the only thing that he's been going long on is like Chinese stocks and water. And just to think about it, the only thing that he hasn't called a bubble is water is pretty freaking funny to me. So I don't know. I don't really care what Michael Burry does anymore. Like you said, I don't even mind the Palantir part. Maybe he was trying to do this for earnings. Maybe he expected the worst. But, NVIDIA, that's an interesting one. It doesn't even look that expensive based on their growth.
Yeah, and one more thing, in a minute, I'd love to hear your thoughts too. But like the Palantir one, if it's on valuation, I get that. I don't think that that's a great reason to go short. But like we've seen, like those earnings were absolutely ridiculous. Like last quarter, I said they were the best earnings of any company I've ever followed closely in my entire life, and then they just outdid themselves. And the stock fell after hours. Why? Well, we'll have to see, how it shakes out over the next few weeks. But it's likely priced beyond perfection at this point, because if you fall in those earnings, it's not too shocking. We've seen it run up into earnings too. That's a factor. But so maybe he's right there, but that doesn't mean, I don't know. The NVIDIA one's like even crazier. So Amit, what do you think?
No, I agree. I agree with everything you guys said. We've talked ad nauseum about why I think AI is not a bubble. Palantir had one of the craziest quarters in history. I mean, like, I don't even think there's an adjective to describe those numbers that we saw, especially on the margin profile, along with the top line revenue growth. It's just the stock had a lot priced into it. So I think people are freaking out because it's down below 200. I'm like, dude, it was at 170 last week. And 170 is a pretty aggressive valuation too. So it's like, I just think people are very short-term in nature when it comes to these moves. And same thing we saw with SoFi. People freaked out when it didn't move as much, even though it was a great quarter. But if you've been investing in these names, SoFi, Palantir, Hood, Rocket Lab, for years, it doesn't matter. You care about the execution. I mean, Robinhood might deliver an amazing quarter, and that stock might go back down to 130 because there's a lot priced into Robinhood right now, and Bitcoin and crypto has not been cooperating. So, you have some natural headwinds that we'll talk about, but it doesn't mean those companies are bad or not executing at a phenomenal level. All right, so let's get into it. Robinhood, we'll do some earnings predictions. Tanner usually keeps track of all the numbers in an Excel sheet. So Tanner, I think you can bring that up and we'll kind of go through all the numbers.
Sure.
Street's expecting 1.2 billion of top line revenue, which would be, I think, well over 50% year-over-year growth or just about 50% year-over-year growth. And they're expecting about 54 cents of EPS. So we'll get into these numbers and then we'll kind of compare what we're thinking.
I also have it at 1.2 billion. I'm seeing 89% year-over-year growth.
You're probably right. I was probably looking at the wrong Q3. Oh, 637. Yeah. Yeah. Okay. That's it.
It's going to be much harder Q4.
Yes. Yeah. Q4 is.
That's whenever it's going to get pretty freaking hard. But still nearly 22% quarter-over-quarter growth, $1.2 billion. And then, so transaction-based revenue, I have growing at 63% because I also think that this includes prediction markets. Net interest revenue, I'm always higher than where it looks like I need to be, but 372 million. And then for other revenue, I have 70 million. It's usually a drop quarter over quarter from Q2 to Q3. Okay, and we can go back to the last Q2 to Q3, also quite a significant drop, nearly half. So I don't have much changing there. Sorry. Okay, there we go. What do you guys want me to change? What do you guys want to look at? I'm seeing 1.2 million, and I don't know if I have 55 cents of EPS, which I don't even know what the street is at right now.
I think you're at 54.
54, yeah.
Yeah, okay. So I'm right in line.
Okay. Roy, go ahead.
Go ahead, Matt. So I have 12.15 for total revenue, and yet I have 57 cents for EPS just because of that. The way that they, most of their costs are actually fixed. I don't know where I'm a little under yours, but I guess we could go through like the nitty gritty. But yeah, I mean, trend. There's this quarter, like there's a lot of things that we don't know. Like margin is one of those things where I think it's going to do very well, and I don't know. I really didn't know what to put there. What did you have for trade PMR and Bitstamp specifically, Tanner? Because that might be where I'm off. Because I'm
not including trade PMR. Might be I don't really know how to look at it too much. I'm just looking at the total assets under custody, and so that's inclusive of trade PMR now because it's total assets under administration or whatever it changed to. And then I lowered the take rate just slightly because the rate cut just at the end. Mm-hmm. And Bitstamp I have I'll show you what I did.
We got the September month-to-date volumes, so I'm sure you extrapolated a bit of that as well.
For Bitstamp?
Well, for everything.
Yeah. Oh, yeah. So what I did was month to date, I took the total days that we saw so far, how many total trading days, the average daily volumes, and then just extrapolated out how much there would be for the remaining days. So this is actually my September estimate for equity trading volume, 240 billion, options contracts, 218.17 million, Robinhood app crypto, 9.6 billion, and Bitstamp at 14.4 billion.
What's your overall crypto take rate?
My crypto notional volume is 0.58. And then for Bitstamp, I did 0.15.
Yeah.
Because there's some there's some consumer volume in there, but a lot of it, like 80%, is institutional, which is usually 1/20th, practically 1/10 of the take rate. So much lower.
Okay, and then for others, you have 70. Are you including 20 million of prediction markets in that, or
prediction markets? I put in transaction-based revenue.
Oh, okay.
Okay. So that is just slightly higher. So if we go down to, sorry, I'm all over the place. So if you take a look at my total volume and the take rate that I assume, that's how I get to 305 million in options, 294 million in cryptocurrency, which is inclusive of Bitstamp, 84 million in equities, and then in other is where I have prediction markets, which went from 48 million to 80 million. Which,
wait, so that's in your others transaction revenues. Okay.
Others transaction revenue. Yeah. Exactly.
Oh, I see. Yeah.
They disclose it in others in general, not in others transaction right now, right?
I'm not sure. I haven't seen that. If that's in the thing, then I need to read it. But
I would like some clarity on that, because we don't know where they index that revenue. But that's why I was asking. So
it's in others transaction. I just read it. Other transaction-based revenue primarily comprises revenue related to instant withdrawals, interchange revenue, which is offset by rewards and expenses, and event contracts.
Okay, perfect. Okay, so that makes sense in transaction revenues then. Yeah, look, I agree with all your numbers. I don't think this quarter is that hard to figure out. The real question is going to be Q4. But Roy, do you think there's any big disagreement with those numbers, or?
I had a couple of questions. So one, Lenny in my audience asked, is he counting staking crypto? Hood takes 1% of staking. Did you increase?
No.
Okay. So yeah, these are usually the way Tanner does these, and I'm assuming it's the same way, is that these are like pretty conservative.
Decently, yeah.
And then what's unknown is you either extrapolate or you're just like, well, that'll just be gravy on top. So
Right.
In predictions overall, you said you had how much?
I added roughly around 20 million, something like that.
Yeah, I was at 25, but yeah, that's close. And then the other that was a real standout from last quarter was the securities lending, which increased dramatically. Did you break that out, or did you accommodate for that? Okay.
No, I only look at net interest revenue just here in terms of taking a percentage and trying to follow that as like a trend.
Yeah.
So I don't want to go too far because it's actually going to show us bad data. But
yeah,
if I go like out to here, for example, and then where did that put me? Sorry, it made a chart somewhere. Okay, over here.
I was a good bit higher on net interest income, which I accounted for the rate cuts, but I don't know if securities lender was the reason why. But
yeah,
and
so
margin also a standout for me.
This is the sort of the trend line that we've been seeing. And then if I just take this and move this over one, all I'm assuming is that trend sort of continues.
Right.
Not making any drastic changes, and then letting the amount of assets under management just continue to flow onto platform, and making no additional assumptions about it. Just a continued trend of a lower percentage. That's, maybe a worsening of the diversification of the types of revenue that net interest makes. Also, trade PMR. The overall like rates that we can end up charging, and with the rate cuts and everything, it is going to fall over time.
Yeah. No, I mean, those are really close. It's done a different way, and I think you're probably way closer and way more accurate on the transaction revenue. If that's the case, and then I'm right on some of those net interest things, this might actually be a beat. I actually have it as a miss relative to where expectations are slightly. A beat on EPS, though. But again, they don't issue guidance. So
EPS is a weird one because I have the tax rate climbing quite a lot. So my tax rate went from essentially 12.7% to nearly 20%, which is
why?
I saw a bunch of honestly, This is not something I cover very often, so I'm no tax expert. But I saw it across, I think it was like 4 different analyst reports, just based on the amount that they've run off from their losses previously. They've been quite profitable for some time, so it's going to have to return to, a regular tax rate that they have to pay. So unless there's some benefits from the big beautiful bill, which what I've heard might be coming in for Q4 and these sort of things that I'm missing, I don't know. But this is going to be a return to a tax rate that's more normal for a company that's just profitable and making hundreds of millions of dollars.
By the way, slightly related to that, and also to Robinhood, and then we'll get back to earnings, is once it is next year. So there was a lot of tax ramifications that were positive for many individuals in the big beautiful bill, and the IRS did not adjust withholding rates at all as a result of the bill. So what this means is there's going to be a higher amount than normal. I think that a lot of I read an article and it broke it down. A lot of different people's estimates was around $600 or $700 that would go per the average American individual. Now, I don't know if that's mean, median, mode. I need to do some more digging, but their argument was like that this will function as a mini stimulus check next year for Americans, which we know tends to do good things for equities. So something to keep an eye on. That's
cool. That's a good idea. I also kept the share count essentially flat.
So that's what I was going to ask. You didn't think buybacks would happen this quarter?
No, I do. I do think buybacks are going to happen. But I think they said in their earnings that they're going to buy back enough to flatten stock-based compensation.
Yeah. Okay.
So I don't think that their share count's going to go down in 2025. I just think they're looking to offset SBC.
Yeah. Okay. So then here's the question. Earnings are going to be, look, 1.89% year-over-year growth is phenomenal. Operating leverage is still going to be amazing. All the core metrics are likely going up and to the right. The question is about the stock. What do you guys think? Because Bitcoin and Ethereum are not cooperating in Q4. October was horrendous. November so far is a disaster. I know it's only 3 days in, but it's not good. So if the street's looking forward to Q4, which they're going to have to beat $1 billion in revenue, and I think there's ways they can, even if they have a massive Q3, is it enough, in your opinion, to get the stock, above all-time highs at 150?
So they several things would have to happen. One is probably a pretty nice beat, which is possible. There's some numbers that we don't know out there. I think they would also probably need to release the October numbers, and they would have to look a lot better than we expect because we know crypto is going to be horrendous. And coupled with that, they'll have to really break out and share more, which I think that they absolutely will, and I think it will show the ramp that's happening in the predictions market more than what Vlad showed off when they hit the 4 billion mark. I think that could excite things and get us back to all-time highs. But yeah, my guess is we probably have a pullback.
I think that Robinhood is getting really good at, almost like what SoFi did, where whenever certain activities in their business are not working, they're focusing on other things.
Yeah.
And so sports markets are really, really strong right now. And so event contracts, they've been pushing out hundreds of new contracts, making sure that they have all the big games before they happen. We just saw huge volume on these pro baseball championships, NBA, look at that. $25 million in revenue in October.
Yeah.
Is that one? I know you do a good job tracking this, but is that legit? Like, how confident are you that you're right on those numbers? 25 million. Well, technically, it's not that hard to figure it out, right? 2.5 million.
And he'll reply, but what I've seen is he's very conservative because he takes basically only what he can actually see and extrapolate. He doesn't accommodate for numbers where people actually exit the contracts early or things that he doesn't observe either, and usually just tracks his main events. So this is I don't know. It sounds aggressive, but I don't think that he is. Which
that could help hedge against crypto in Q4, to be honest.
And this is insane because I'm predicting, and maybe you're higher than me, Amit, but I'm predicting about 25 million from the entire quarter for predictions market previously.
Yes.
And this is a fast ramp, really fast.
If you have that photo that he showed of the pro baseball championship, I think it showed like 20 or 25 million shares of or like contracts traded on Robinhood. And I was like, man, that's so high. Like, I bet that's Kalshi's volume. You know, I was started to question myself. And then I went on Kalshi, and Kalshi was at like, 60 million or something. And I'm like, holy, Robinhood is still putting up 1/3 of the total, amount of contracts. They, at the end of the championship, for this one contract alone on Kalshi, they did nearly 88 million contracts. If Hood did 1/3 of that, and then this is one contract, they're doing this, there's a pro baseball, or there's a pro basketball, pro football, college football, other sports that I'm potentially not even thinking about. It's like, it could really ramp up very fast that we're not even thinking about right now. Like, look at this. What an amazing slide this is. I don't know who to credit here, Amit or Roy.
Let's call you.
That's Amit.
You're telling me that a third of this is not being seen by Hood? I mean, I bet their chart looks just like this, if not more, if not a growing percentage of market share.
Yeah, I want some more clarity around this from Hood, because we need to confirm that the volume we're seeing is Robinhood volume. Like, are we sure about that? That when you trade on Robinhood, those...
I'm pretty sure I asked Vlad in an elevator, and he said yes. But I'm not even 100% sure if he is paying all that close of attention to this product. I'm sure a team is fully taking care of this product.
Because, dude, they might have... We might have entered into the greatest business model ever. Because when you really think about it, and I want to play this clip from the Kalshi founder, Tarek. He's getting wrecked for this clip online because people just love to hate. But like, when you really understand what he's saying, it has to be the greatest business model.
Wait. Before you start that, I think Juan is in chat right here. I see another Juan Rodriguez in the chat that said, no, they are now saying it's also Kalshi's.
See that
who is saying that though?
But I go on Kalshi. Juan said, yeah, I take 50% of it for sports, which is conservative.
Well, I don't know how conservative that is, but whenever I saw your slide, your picture, it said 20 or 25, whatever that was. It was like nearly 20 million contracts. I was watching the baseball game at the same time, and we're at like nearly 60 million contracts. So that's not the same as Kalshi's.
Lenny says it's not Robinhood volume. I contacted customer service. Lenny, can you tag me in this post about customer service responding to you? Because
that honestly just might be my question on Wednesday. Maybe I'll try to do a two-parter, but
yeah, or is there not a contract going right now that we could check on both the things? Like, they're from every time I've checked, they're not the same.
It's always different, and usually by a good bit. So I don't know if yeah.
And there's been other, there's been Morgan Stanley and I think Piper Sandler that said that they're going to make 200 million on this. They talked about the market share growth. How are they assuming the market share growth and the take rate and all this stuff if it's not separated?
It's a good point.
Sending it to Amit now on X.
I definitely think this is an important question, because again, if Robinhood's able to scale this the way they've been able to scale some of these other business lines, and they have the natural tailwind of a prediction market for anything, I think it's up there in terms of one of the best business models ever.
Prediction markets are extremely cool and very useful to society in terms of like being able to engage with the news more meaningfully and see the future better. But it's not just that. Like, the core unlock that could happen with prediction markets is like, if you forecast the future better, you are pricing risk. Like, you price any risk. And what I mean by that is, like, now we have a better way to measure all these risks that could happen to companies, to government, to humanity, to anything, whether it's, climate, COVID, health, the economy, all, politics, all these different things. And if you can price risk, then you can make better decisions about the risk. Like if you understand the risk better, you can make better decisions about how to manage it. And then you can like transfer it, like you can hedge. And I think that's where the market really becomes very, very large, because institutions are very exposed to all types of bad things happening in the future they don't have control over. Prediction markets are extreme.
Okay, so the reason he got clowned on X is because he was seen as like the typical tech bro who's talking about democratizing, yada yada, and yes, it's a very easy clip to make fun of and make a meme out of. But at its core, he's saying you can make a prediction market out of anything. If Robinhood does this over the next 5 years and just makes prediction markets out of anything, and this is the way that institutions, hedge funds, investors, etc., use to either A, bet, or B, price risk, which means hedge and sort of navigate their own positions. Like the more and more events that become important, the more and more people that enter into this ecosystem of prediction markets, even if they're not actively trading, even if they're just consuming, this is going to be $1 billion business for them at some point over the next 5 years. And the scalability of that likely is a hedge against a lot of the other cyclical parts of the business.
Yeah, and this, I think we talked about it last week or maybe 2 weeks ago, Stratechery article that talked about the merits of the prediction market in the world of AI when you don't know what's real and what's not. There is and there can be manipulation, I think, especially as this becomes more well-known and popular. And I thought this was really well done by Kalshi. Again, they're partners with Robinhood on like breaking down and actually showing the use case and demonstrating it, which, I mean, people are already using the predictions market all the time in sports and also for politics, especially because we see that it was very successful. And so like, if you look at the overall bet on Polymarket or on Kalshi, it looks like overwhelmingly Mamdani will win. But the reality is they can actually break down the data on a very granular level and see what the prediction actually looks like in New York, the city, the rest of New York, and outside as well. There were some insinuations that that this was being deliberately skewed by outsiders who wanted to influence election. I don't know if that's true or not, but it's interesting. And yeah, this reads almost like a poll, but I would actually trust this more, especially with this granular level of data, than I would any other polling agent. So it's really
insane.
Yeah.
I didn't see this post. This is crazy.
Yeah.
How crazy is that? That the betting markets are almost all betting on Mamdani outside of New York.
Yeah. I know one New Yorker that's going the other direction. He's betting Cuomo.
Yeah, because he probably, everyone around him is saying they're worried about what's happening.
The polls are actually closing, in on Cuomo having not a lead, but narrowing the gap. So tomorrow night's going to be interesting. I thought a week ago Mamdani had it in the bag. Now I'm like, I don't know, bro. And if the Republican guy wasn't right, it would be way closer because he's taking away like 15% of Cuomo's base.
Yeah.
So,
by the way, somebody said the game tonight, yeah, it's at 20 million in terms of volume on Robinhood.
So hold on. Lenny just sent me this. He asked the support and they said, no, Robinhood is showing open contracts for each side while Kalshi is showing the total volume and dollar amount traded.
Okay, that could be.
Oh,
wait a minute. Total volume. Okay, yeah, maybe.
So open contracts means not Robinhood open contracts, but just open contracts. So the reason there's difference between Kalshi is because they're not showing contracts; they're showing money.
So even if someone's closed out a trade, it would count on Kalshi, but it would close on Robinhood.
Mm-hmm.
Theoretically, I think yes.
Yeah, because that contract would close, but they would count the total volume that's traded. Okay. I am starting to get worried, though. It hasn't affected me much in terms of the earnings predictions. And because I'm a person that gives credit all the time, I want to give perfect credit to Roy for finding this, because this was just a crazy find. I didn't know that this was a thing. Anyway, but whenever I see, what's Trump going to say next, I don't think about it much. But what about what Amit's going to say next? If you could share this really quick.
There's no freaking way.
What will Robinhood say during the next earnings call?
It's like there better not be a prediction market about what
this is about you.
No, it's not.
A 74% chance if they say social, if they say international, How crazy is it that you could say, hey, Vlad, real quick question about Robinhood Social, and if you can just wrap it up, like, what's your favorite football team?
Dude, we should go bet on Robinhood Social and then ask him. Dude, that's crazy. But that's kind of like illegal, right? Like, what's it?
Well, so
Wait,
I'm not going to do it.
I'm
going to stay far away from this. I'm just surprised
Us three would never do this, but theoretically, if an influencer told their audience, hey guys, like, I'm going to ask about the word social and really frame my question in a way that forces them to say the word social. So bet on social. Again, none of us would do this. I think we have a lot more morals than that. But like, that is definitely a form of manipulation, right? And then it comes down to what Brian Armstrong did. Do we want to talk about that? Because that shit to me was ridiculous. Let me get the clip right here. He basically completely manipulated the crypto market. This is what he said at the very end of their call as well.
On that, I was a little distracted because I was tracking the prediction market about what Coinbase will say on their next earnings call, and I just want to, add here the words Bitcoin, Ethereum, blockchain, staking, and Web3 to make sure we get those in before the end of the call.
I know it's funny, but as soon as I heard that, I thought it was the most cringe thing ever. I don't think Brian Armstrong has like some buddies that, bet on these words. And like, I think someone literally sent it in the Slack, as he said, and he thought it was a fun joke. But immediately my mind goes to, oh my goodness, this is completely like insider trading at its core.
Think about the tens and I don't know how popular that contract is for the, Robinhood or for the Coinbase call, for example. The Robinhood call has less than $20,000 on it. But you only gave money to the people that said yes. You pulled the rug on all the people that said no.
That was the worst part.
So,
and maybe it's because Brian liked the words, like he likes the word Bitcoin, Ethereum, stablecoin, which is why he wanted to give it to the people who voted yes. But like, it's weird, dude. And I could imagine, forget just on Robinhood's earnings calls, but any earnings calls, if this is what you're betting on, what people say, at what point do the regulators get involved? Or do they just?
I think they will.
A lot of stuff like this. Like there was the women's basketball thing that was being thrown that I'm not going to rehash, and people were like forcing that to occur. And then also, like you see, nothing happened with this, but you'll see like different company or types of events where people are involved, and like they'll even like repost on X, and they'll be like, this would be really funny if I did this or something along those lines. And it's like, man, we need some real regulation here, and I think it's very welcome and needed to know what is okay and what's not. And the nice thing about this administration is they've shown a willingness to, instead of regulate by enforcement and just slap fines on anybody who even dares to think about doing a prediction market. It used to be crypto. Instead, they're like, let's actually do some real guidelines, and that's a much healthier way to do that. But right now, we're in a bit of a Wild West. Which means we could see some massive changes in what is okay and what's not as related to predictions markets. So, and then I think that we do need to see some.
I don't like it, dude. I really do think it's an issue. Like if you had someone who didn't have any morals or ethics and was in a position of influence, and then they were able to use that influence, like the freaking CEO of Coinbase, which again, it just really rubbed me the wrong way. Like I didn't even think it was a joke. It just felt like icky the way he did it. And I would never expect Vlad to do anything like that. But like, what if he did? And what if it was just like a fun joke? Like I wouldn't like that. But what if he makes a bunch of people rich because he looked at the call sheet prediction market because he's making like it just theoretically you wouldn't want that to happen. And then you wouldn't want other external people outside of the company to be able to make it happen in any way. But I don't have a lot of faith that the Trump administration is actually going to regulate that.
Samuel says this is definitely already happening all the time. 1,000%. 1,000%. It happens in politics all the time. Nancy Pelosi's doing it. Like, let's get real. Like, let's go buy up all these stocks and then change the laws. Like,
no. Hold on. You're comparing oranges to apples here. This is a brand new product That is
No.
you hold on. It's letting you price the probability of someone saying a word. That has never existed before.
Yes, but it's the same idea. You're setting up bets before you change the outcome. Right? Like,
yes, but the bets have never been on someone saying a word. They've been on an earnings report or
but here's the thing. No one needs to bet again. Like, if the politician or whatever is the one that's making that bet, these are straight up degenerate gamblers on the other side of this saying, no, he's not going to say social. Like you need a market in order to make any money. You know? So who are the people that go to these WNBA contracts and say, no, there's not going to be green items thrown onto the field. No, there's not going to be someone that says social. Like, are you guys nuts? This is like, at some point, it's a donation to the people who are controlling the market.
Yeah.
I don't see your point, though. My point is that if you can price influence...
You can't price it if there's no market.
No, but the fact that there's a market is irrelevant. The point is, it's not a good thing to have that market not have any level of regulation, because then you can have Brian Armstrong say whatever he wants and completely rug one side. That's not an efficient market, is my point. That's not a fair market either, unless we just don't care. And then it's like, whatever.
Yeah, I would prefer.
Real quick, it's like Brian Armstrong can't give you the Q2 earnings results 3 days before they report. There's a reason there's a quiet period for insiders.
No, I agree.
So why should he be allowed to manipulate a unregulated prediction market, just like he could potentially tell you the results before, and then you could buy the stock or sell the stock before? Like, it's the same concept. There's regulations on what you're allowed to say or not say.
I don't have as much problem with that as I would if he knew that there was somebody that would material benefit. Like he's like, hey, I'm going to say these things, bet on this. That should be completely illegal. And also, if you're in the know, like you know the outcome of something, like you are Taylor Swift, and you're going to say whatever, cry or what, then you cannot participate, which they already have some of that. At least, if you guys haven't tried the predictions market, at least the first time that I logged in and used like the sports side of it a month ago, they had a whole list of disclaimers, which they hadn't had before. So, but
I honestly, the more I think about it, I just think like, how dumb can you be? If you realize that the market is so obviously manipulatable, like, hey, say a word, and you see things like Brian Armstrong just coming out and saying all of the words for fun, don't bet against them. There doesn't need to be a market.
No, but Tanner, that line of logic does not withhold the regulatory framework that should be necessary to make sure that Brian Armstrong or any CEO doesn't manipulate the market by, as Roy said, having some buddies bet on a word and then saying. And you can't prove that Brian Armstrong knows that he has a bunch of buddies betting on this word. He might just say it for the hell of saying it. But if that is, if that intention is there, that's obvious manipulation. Right? That's like him texting his friends.
Yeah, but I get it, but it's manipulation of a non-existing market. Like, people will just stop putting their money in these. Like I said, with the Robinhood thing, there's less than $20,000 trading on this thing. This is not like, buying up hundreds of millions of dollars of NVIDIA stock before you pump it. I mean, the amount of money that's going to trade hands is going to be in the thousands of dollars.
Yeah, but that argument doesn't make sense. If we're expecting this whole market to cater massively, eventually there will be a lot more than 20,000.
Yeah, of the important, like, who is going to win the baseball game? Who's going to win the next election? Because it's going to be much harder to manipulate those types of things. Who's going to say something in an earnings call? I mean, yeah, they can remove those.
Hold on. What if there was 20 million that was betting?
No, but you're making up things. That is never going to happen.
Dude, who would have thought 2 years ago you would even have 20,000 betted on?
Yeah,
what do you mean
we can't say it'll never happen. It could absolutely.
But it's not 20,000 betting on each side. If there's an 89% chance of something happen, the amount of money that's only going to exchange hands is only that 11%.
But at the end of the day, it is still manipulating.
No, I get it. But it's not a good thing to go chop your wiener off at home, but there's no laws to say, hey, don't start a business, chop wieners off. Like at some point there's common sense. Like this is an obviously manipulative market. Like at what point do you regulate shitcoins and Shiba Inu and all that stuff? Like that would all go along with this. There's obvious pump and dumps there. People stop buying them.
You lost me on
That's
the
just
wiener.
capitalism. You let people do what they want to do with their money.
Look, I'm a capitalist. I agree with you. I just think if it's so blatant, I think, one could argue Brian Armstrong did that as a point to make the argument that this shit is stupid in terms of not having any regulatory framework and that he wants there to be more regulation.
People in chat are saying, I don't get it. You have to have a solution then. You can't just say there's a problem without a solution. What's the solution? You remove the market?
No. I'm saying you remove the market. I'm saying like the regulation is Vlad cannot say to anybody what the revenue is before the revenue publicly is released. That's the point of being a public company. That's a regulation by the SEC. I think they could easily say, hey, Vlad, on the earnings call, you cannot explicitly say words that you have knowledge of that are relevant in the event contracts.
That's
no,
gonna be tough
bro.
to prove. That's going to be really tough to prove.
Yeah, look at the word.
Hold on. What Brian Armstrong did in those last 30 seconds, that is an explicit admitting of he knows that this is going to rug a bunch of that. I think at the bare minimum, you should say, hey, you're not allowed to do that.
Okay,
you shouldn't be
sure, but that's not going to change anything. The next time he does it, he's just going to put it into his speech. That it doesn't.
No, he can't. Dude, if Vlad ends up saying football because he somehow says football, that's different. But if he says, I am saying football so that people can make money off saying football, that shouldn't happen.
Sometimes you make me want to pull my hair out. If I have a bunch of buddies, you
don't even have any hair. What are you talking about?
If I have a bunch of buddies and I want a football thing to go through, you think I'm going to say, I'm saying football because of the event contract after I know it's illegal? No, I'm just going to say, hey, Vlad, what do you think about the football game? Is this a prediction market that you roll it into regular vocabulary?
No,
they can't
agree.
fault Brian Armstrong if he talked about Web3. How do you control that?
I agree. I'm not saying you should. I'm saying the explicit admitting that you are doing something for the sake of a prediction market at its bare minimum. I don't think you would disagree. That probably shouldn't be allowed to happen. Jay Powell should not be able to go on the FOMC meeting and saying, I'm going to cough to make sure that people make money off me betting to cough. We would all not think that's okay, right?
Okay, but it's happened one time.
That's irrelevant. This whole market is growing like crazy. There could be a lot more things that happen over the next 10 years of prediction markets.
So that's my concern is not so much like CEOs doing that or whatever. I think, clear framework is needed. And one of those is if you or somebody that you know is going to material benefit from you doing a decision that influences the predictions market, that's a no. You can't do that. And now that'll be hard to prove, and it should be hard to prove. The burden of proof should be on the SEC, or I guess it might not be them, but whatever organization. But my concern is where it goes from here. So we right now have seen predictions markets have done a pretty good job of understanding the outcome of certain things, especially elections. And so I'm really curious if we'll see things flip to the point where the outcomes occur because the predictions market said that it would, and there's actually money on that. And so there's people that are like, well, I would vote, this way, but I'm actually going to vote this way because I got a bunch of money there and I think that they can win and I'll have a massive payout. People's right to do, that's fine, but that sets kind of a dangerous precedent. But even worse, we can extrapolate, and I don't think that this would ever happen, and I hope it wouldn't happen, but you guys did mention, self-mutilation was one of those things. I think that I've seen some predictions market stuff on Polymarket, like predicting people's death, presumably of old age. But let's say that there's a predictions market out there, 3 or 4 years from now, predicting somebody's death. And somebody says, you know what, I'm going to take matters in my own hands and get a massive payout. That's already illegal. But I'm just saying, if we start seeing that sort of thing, regulators will come down very, very hard on predictions market. I think it should be a light touch of don't do things to
how much money do you think is trading?
I need to do something illegal. So Invisible says, Amit, what color are your socks? I'm running a betting tournament. I think it's black and you might have flippers. It is black and I do have flippers. So so if you're betting on black and flippers, the answer is yes. And I hope you make a lot of money because yes, you are correct on both those bets. So there you go. Manipulate these markets, baby.
It's weird though. Like, so,
but we're talking about like the weirdest, like what famous person that people are betting on their death is going to kill themselves for prediction market? What are we talking about?
No. That wouldn't happen. Here's some things that could happen. One is that let's say that they're predicting former President Joe Biden, that he'll pass away, presumably of natural causes. People are betting on that. That's kind of morbid to do that. But let's just say that's a market. And then what if somebody's like, you know what? I can make a bunch of money. I can be set for life because the odds are really low. I take matters in my own hands. I don't like the guy anyway. I mean, it's horrible. It's already murder. They don't need to have much thought. But the other thing is too, and like let's say it's a person that's maybe less famous, or maybe they're famous and well known. They don't
murder
have a lot of money.
Murder is already illegal.
They could. This person. Let's say it's Biden. Okay. Let's say he's not in his right mind, and for whatever reason he has no money left, or somebody like that. That's a celebrity and so he's like, you know what I can do is I can take matter in my own hands. I'm going to kill myself, but I'm going to make sure my family has a massive payout. Like there are some horrendous things that can happen.
Yeah, get a life insurance policy. You don't need to bet on a predictions market.
Okay, Roy, I wouldn't go that far.
Yes, it is. Yes, it is.
Not in the States.
Well, I would like to check on that, but it is after years of signing on the contract. Usually after 2 years, suicide is allowed in a life insurance policy.
Look, I don't think a prediction market will eventually lead to someone killing another person, maybe in the next 10 years. And I don't think, I'm just saying, I find it weird that people in power can use these markets to manipulate. And the closest example we have are CEOs. And I think maybe there should be some regulatory frameworks. And by the way, if we want prediction markets to grow as an industry, we're going to need some regulations. It can't just be the wild, wild west, right? It's a brand new industry that's creating new economic forms of mobility. So I think there has to be some type of regulation. But if people in power, like a Powell, can explicitly admit they are doing something, or the way they're doing it is so explicit, it's almost like obvious, that probably shouldn't happen.
Yeah, all I'm saying is I don't know what the solution would be, and it's kind of hard.
Do you agree there's a problem at all, or no?
I agree there's a problem. I think the market's going to solve it themselves by not betting on those, because they realize that there's only like they're going to be so heavily manipulated. It's like playing a game of 3-card Monte or something under the Paris Eiffel Tower. Like we all know it's a scam. You stop playing it. It's not a fair game. You realize that there's a trick. You might not even know what the trick is. You move on. Like,
it's not a horrible point. It's not. You
don't bet no on those markets. It's a scam.
Yeah, I think that there's an element of that, but I think we're all probably there. We're just in the same ballpark of there needs to be more regulatory clarity, but also a lot of these things will take care of themselves.
Yeah, I mean, look, for these $20,000 volume bets, like it probably will take care of it. When I saw that from Brian Armstrong, I didn't think it was funny. I thought it was like, this guy's just straight up. And if this had anything to do with the actual earnings results, then the SEC would get involved. But this is the wild, wild west. So it doesn't matter. And there's barely any money being bet. It's not a stock. It's just what he's going to say. So I agree with you, Tanner. The markets probably will solve themselves. Like, I think you have a really good point there, that it's so minuscule and stupid in the grand scheme of things that it shouldn't be an issue enough to regulate. So I guess the best of both worlds is if we see a high profile situation of manipulation, maybe then, we should think about regulatory frameworks. But until then, maybe the markets solve it themselves.
Do you guys think that the political party, the administration currently, might be making billions of dollars in cryptocurrency right now based on regulation that's going through?
Yes.
Do you think that past administrations have profited greatly on speeches, on events, and everything like this after passing a bunch of regulatory frameworks that empowered certain businesses to strengthen their market share? I mean, like, there's so many larger corruption issues than throwing things onto WNBA courts.
It's a fair point.
Yeah, and it's like we're also in an environment too, at least with the administration, that they have a lighter touch, which I think a lighter touch is fine, and we'll see if that works. But yeah, we're very far away from the dark stuff that I mentioned. But I mean, human nature has pushed not predictions markets, but other things to that extreme, and it can again. We are not so different than people that lived 2,000 years ago.
Also, Tanner, when you mentioned Trump, Trump media is coming out with prediction markets on Truth Social. You guys didn't see that? That was last week. They announced it.
No, I saw it with crypto.com.
Oh, so then we're definitely not getting any regulations on this. This shit is gonna be.
If you have to choose between completely wild west and very light or no regulation, or stifling regulation and you can't get anything done, I choose this. I think there's a happy medium, but this is better.
Yeah. I mean, look, Tanner's probably right. There shouldn't be some massive form of regulation. When I saw that from Brian Armstrong, it was such explicit that I was just like, this just rubs the wrong way. And I don't know. It felt like it was too aggressive on.
It definitely looked like it sped up the regulatory process for sure.
Yeah. Even though you're probably right, there might not be an easy regulatory solution to this, which is actually kind of good for Robinhood, because there's no regulations over the next few years and they just keep expanding this product. I mean, I don't think it's crazy to say it can get to $1 billion in like 4 or 5 years. I think Piper Sandler has $200 million for next year. So if that can just keep catering at the level it's at right now, even potentially even more as more people get excited about prediction markets in general, yeah, it should do well.
Now, if Jerome Powell pulls a Brian Armstrong at the end of one of his Fed pressers, that's when we have concerns.
Yeah. What did you guys think about Sage and Hood officially teaming up to roll out discounted mortgage rates? Roy?
Yeah, it was interesting. Like one of the things, like at least Vlad's comments, was that this is now for Robinhood Gold annual members. And of course, you can do a monthly subscription or you can do annual as well. I'm kind of curious. I'm guessing that maybe that's hey, all the annual guys get it first, and then everybody else is on Robinhood Gold. It's just like a 2-step rollout. I'm wondering if that kind of sets a precedent for the future, and if perhaps there will be perks that are geared more towards annual. But yeah, this is nice. The way that Vlad talked about it, it sounded like massive and like huge interest and demand. And I'm sure there was some. But right now, the housing market is very cool. So what'll be very interesting is if we see that really heat up over the next couple of years. Plus, there's a lot of other offers that could be out there, not even just for Sage, but other partners, even potentially SoFi, towards a very well understood and affluent Robinhood Gold cohort. So I think that we'll see additional products that are offered in that way, which are accretive to Robinhood, also make the Gold experience better. So, but yeah, this is really cool. Lastly, we may move closer to my place of work, which would be really nice. And so getting something like this, like I'm really interested. Like this is, when they first floated this as far as like a survey thing for Robinhood users, I was like, that's kind of weird. Now I'm like, oh man, give me that. Yes.
Do you think they will partner with Open Door?
I was literally just about to ask. Even the wording of this, democratize home. Dude, Kaz has literally been saying we need to democratize home ownership for the past couple of weeks.
It's pretty clear. I mean, so they're using Say Technologies. Obviously, Kaz and Vlad had a conversation, and it's probably those two and others. I'm certain as well. But it seems like that they may see the opportunity for some mutual beneficial stuff. So yeah, I didn't catch that, but that's a possibility.
Well, what do you think it would look like partnering with Open Door?
I don't know, discount if you purchase, or potentially better rates if you put your house up on Open Door or something.
Yes,
save if you sell your house to them.
Save $500 in closing costs if you're a Robinhood Gold member.
Yeah. Well, people are saying it's going to be tokenized homes. That part, I don't know if it's as easy.
I'm not sure what that means.
The Open Door's homes are going to be tokenized on Robinhood's new trading platform to trade tokenized parts of real estate.
You could buy a bunch of homes, almost like a tranche of homes.
Okay, I see what you're saying. Yeah, the partial ownership, fractional ownership of homes.
Yeah. Exactly.
Yeah.
I feel like they partner with BlackRock to really do that, not Open Door. I also don't know what Open Door gets out of that.
And also, they're not well, I don't know the open door business model, but I don't think they're helping people with rent and stuff like this. I don't think there's any income. Right. So
Yeah.
like BlackRock at least would be the, landlord that's collecting some sort of return. If you're just holding on to vacant homes, like what?
Why would anyone buy that too?
Yeah.
Like if it's like commercial real estate or like a beachfront property in Laguna Beach, that's different than a random home in Alabama that's on Open Door.
Yeah.
Imagine meme homes pumping. Bro.
It's still better than NFTs at least. So
Airbnb has a little bit of that. They're building all their own homes, the Airbnb experiences, which are.
Can Airbnb do something to make the stock go higher?
I don't think so anymore.
This is the worst tech company. This is the best tech company ever. It's one of the best ideas in history, and it's created a lot of value. But all that value has gone to the VCs, never to shareholders that took a chance on this.
Yeah. Yeah.
I mean, dude, Airbnb, I feel like Airbnb is synonymous with it's a noun, right? Like everyone said, but no one cares.
So when did they become a stable coin?
What do you mean?
Sorry, I just got it. That's funny because it's flat.
Oh, okay. That's a good one. That took me a minute.
Not that good.
But dude, they do $4 billion in free cash flow and they don't get a multiple. And I've always wondered why. And I think it's because some people just hate Airbnb, and there are plenty of reasons to hate them, to be honest.
Yeah, the cleaning fees and everything got all out of whack. They're trying to fix that. They're hyper fixated on making the customer experience super good. And they do, to their credit, update the app at a Robinhood speed. It's just they need to enter new verticals, and the times that they've done that, they've been massive mistake after massive mistake, thinking that experiences or adventures or something like this that people would want to do, and honestly, people don't care. They're just looking for a quick place that's really close to the convention that they can go to for a few days, something like this.
Yeah.
Airbnb Rooms was kind of cool because they expanded in a market that they knew very well and opened that up to a new TAM, but it's not, I don't know. I think the hotels have such good benefits because who wants to do their own dishes and take out the trash and do the bed before they leave? You just leave it all out and the hotel's yep, that's what you're paying for. All right, see you later.
It really has made more sense as I've gotten older to be why am I paying for an Airbnb? Why not just go to a hotel? But
yeah, it used to be a compelling reason. Now I think it's a lot less compelling of a reason. So
yeah.
Okay, so the earnings we think are going to be good. Prediction markets, massive tailwind, not going anywhere. Likely no regulatory frameworks that stop the growth of it. This Sage home loans thing is definitely bullish long term, and I think overall it further increases their push into banking. Now, look, we haven't gotten banking by the end of the year. Some people have gotten access to it, but most people have not. I think Robinhood's really trying to make sure they nail the user experience, and they have 27 million users. Maybe they invited a couple 100,000 to be in the pilot test, just like they did for home loans for banking. But that seems to be the big tailwind for 26, is just officially offering real financial services via banking. And then Singapore, I guess that expands into Southeast Asia. Maybe that's happening in 2025 as well. So you have banking and international expansion towards the beginning of next year, along with all the AI Cortex stuff we saw at the summit. And then you have another AI event happening in December, along with a monster quarter. Is that going to be enough to get this bad boy above 150? I guess that is the question that we have to see.
Yeah. I don't know. I'm actually kind of expecting it'll go down just because it's been running up, but year to date is looking pretty good either way. So
it's the best performing stock in the S&P 500.
It's nice to own those,
dude. Well, it's nice though. Well, here's the other thing, dude. I think and I think it's important we say this right now, because maybe I didn't say it enough before Palantir earnings, given the stock's below 200 and people are freaking out. If this thing drops to 130 and it's only up 254% instead of 272%. I just hope people don't freak out. And people are going to freak out. But I hope a sane investor doesn't freak out at a stock being up 230%, even if it was 170% year to date, which, yes, portfolios would take a massive hit if you see Robinhood lose 30, 40 bucks. And I get the human nature of freaking out about it, but this is one of those situations where you got to zoom back and say, they've crushed it this year. Vlad has absolutely executed at a phenomenal level for shareholders. And if you're buying at these levels, you have to be ready to DCA if the market just doesn't want to give it a bigger premium, which could happen.
Yeah. I think if you're to look at this business, like the things that you loved on the way up haven't changed if it starts to go down after earnings. Like Vlad continues to iterate on the product faster than anyone else. They enter new verticals with high success rates very, very quickly. And just like we found banking or the credit card or prediction markets, there's going to be new ones. You know, there's going to be ones we haven't even thought of that they will enter that's going to bring us past $200. And you have to believe that because of the success, the historical success that we've seen over the past many years.
And if you don't trust in that execution, you should sell the stock.
Yes.
Yes.
Yeah.
Yeah.
Then you just don't like Robinhood.
Just take the gains. There's nothing wrong with doing that.
Yep.
But
It's
yeah,
a good
we've
trade.
seen them continuously expand their TAM, and there's a lot of known vectors where they are expanding and they will expand. And a lot of those are international, which still very much a United States play, but it's in the early innings in international, and it's over the next few years really going to ramp up. And we'll have bear markets and crypto winters where it doesn't perform that well, but that's okay.
Well, we should have talked a little bit of Grab and Chime as well. Chime earnings coming up.
For everyone asked about Grab, I'm going to talk about it tomorrow because there's a lot to discuss on Grab. That's why I don't even want to bring it. It's not a 5-minute discussion. So I'm going to write a post. I'm going to talk a lot about it tomorrow morning. TLDR, the earnings were good. And I think, we're going to see how the street reacts to it. If people looked at the option flow, there were hundreds of thousands of call options traded for the 650 strike by the end of the month. There's not a lot of volume after hours. So I think tomorrow will give us a full picture of just like what the volume is looking like. But no, the earnings were great. And so the stock's flat, but tomorrow.
If you were to give it a letter grade, what would you give the earnings?
A-. There's a couple of metrics that could have been a bit better, in my opinion. But everything I wanted to see from them, I saw. And so Tanner just hates Grab, which is why he rolled his eyes right now. But
Bro, no, it's just anything with an A in front of it is crazy. That was the most mid earnings I've ever seen. But
why was it mid? First of all, Tanner, I was listening to you on the stream. You were like, "What's a group MTU?" You can't say it's a mid earnings and you don't even know what MTU stands for. You don't understand the business, which is okay. But
it's not that hard of a business. It's a fintech and Uber put together. They didn't crack a new thing. That's the craziest statement you've ever made. They found a new geography.
You can't tell me you fully understand the company when you couldn't name.
I don't fully understand the business, but I understand what 17% top line growth is whenever you're paying a decent premium. Like there's companies you can go pay for Nubank or dLocal and find 40, 50+% top line growth and better margins. How exciting. Why don't you just go and buy Uber?
Look, there's definitely responses to that and retorts to that. But my point is, calling it mid, given the numbers they put up, I think is weird.
It is mid. The only thing that looked...
Given you know what an MTU is, how many users did they grow year over year?
I don't remember what it was.
6 million.
So
that's not
that doesn't matter at all.
No, but
I think Tanner is saying that the earnings are based on an absolute. Like he's not taking in previous earnings or expectations. He's just saying, glance at it, it's mid. Amit, you might be grading on a curve as far as like relative to expectations or previous earnings.
Well, I'm saying one of the reasons Tanner didn't like Hood in the beginning is because like UI is an emote. It's like, well, that's not in the numbers, but you have to understand that. Saying that growing 6 million users year over year is mid really doesn't understand the competitive dynamics of Southeast Asia and the network effect they're establishing, which is not in the numbers. But if you say it's mid because the numbers just look mid to you, it's like that's really not analyzing the business. It's just analyzing numbers.
I'm not doing a deep dive on the company. I'm just saying I watched the earnings. I looked at the numbers. You could say they grew 6 million users. That doesn't matter. If a company goes from 1 million users to 2 million users, they doubled their base.
Tanner, they're going from 45 million to 48 million.
Exactly why it's not that crazy.
7% of the entire these are things that, again, I think it delegitimizes the argument for mid. You don't love the company, so I understand why you're saying it.
No, I'm just saying everything is a percent base. That's why it's easy to sort of look at a company and go, okay, is this a fast growing business? Is this a slow growing business? You can quickly tell if a company is a growth company or a value business. The intricacies of what makes the company good in your eyes. I'm not suggesting. I'm just saying this was an A. The stock was flat to down. That's an A minus.
Well, okay. I really
this was an exceptional earnings for you.
Wait, hold on, Tanner.
This is a report card you're happy to take home to your parents?
Do not make me say it, because I don't know how you're going to respond to this. Well, I know you're going to respond to this. You're going to have no response to this. SoFi was down on earnings. Are you telling me that wasn't an A+?
No, it wasn't. No, it wasn't. It ended up 6%.
Red. What are you talking?
It ended up 6%.
And then it came down to 29 or 28.80 the day after.
Yeah, and it grew. Earnings grew at 38%, not 17%.
Hold on. You just said the stock on Grab was flat to red after hours. Therefore,
that was the second comment after I made about the top line growth growing 17%.
How can you say something can't be an A- based on the stock price? If that was the case, SoFi's last 5 quarters would
because the whole reason why you got excited in this stock in the first place is how cheaply it's traded, and it moves nothing on A- earnings.
No, but okay. If you're gonna, first of all, it's up 30% for the year. Let me just put that out there, beating the S&P 500. It's number two. If you're using the earnings reaction for the hour and a half before the market close, where there's no,
I'm not. I'm basing it on the fact that I think that there's other international businesses that are just easier to understand.
I don't have a problem with any of that, and you might be right about that. But you said it was mid. And that's where I'm like, wait a second.
It is mid. You know where their growth is going is from their loan portfolio. Any company in the world can grow their loan portfolio.
Okay,
look how much skill it takes. It takes that much skill.
No. You are here's why you're wrong with this.
If you go out and give money, anyone will take it. Loan portfolios only matter if the performance of the underwriting is good. Anyone can take a loan.
Well, okay, so let's talk about
getting your money back is the hard part.
Well, hold on. How does Grab underwrite? What is their competitive advantage?
I didn't make that. I'm not making that assumption.
No, but okay. So this is my problem. You cannot say the majority of the revenue growth or the majority of the growth in the business came from loan dispersals and then say anyone can just give out loans because it's super easy to just give out money without actually analyzing the business and listening to the earnings call and talk about the 100 different variables that Grab as a fintech has that every other bank in Southeast Asia doesn't have in order to underwrite, which is why they are well within their credit loss provisions and are able to scale to $1 billion on their loan run rate, 3.5 billion on a TTM basis, because they know their merchants' revenue, they know their drivers' income, they know their monthly transactions. They have variables in their network effect that are actually allowing them to underwrite and give people 1/3 of the population that they go to a bank in Southeast Asia, they would laugh at them to give a driver who's making $500 a month a loan. It's like, no, but Grab can give that person a loan because they actually know they're going to get paid back. So when you say anyone can give out loans and then don't look at the intricacies or the nuances of Southeast Asia as a business and Grab's network effect in being able to underwrite and then say the earnings are mid.
No, I'm just saying
a lack of understanding the business.
If you do well in one segment of their business and you do mid in the other segment, I wouldn't call that an A-. I don't know if you like,
but why is it?
I think that's a high target. I'm surprised you weren't honest and you said like a B or a C.
But why would I say, first of all, why would I say a B or a C? Like, what are we comparing? Like, did you want 57% revenue growth to get to a B plus? Like,
no,
you wanted the stock to go to 7 for me to say.
Look at the beats. Look what Wall Street was expecting. Weren't they flat? Wasn't it like up 1% beat on revenue? Like, that's an A- to you, was a 1% beat?
Well, Tanner,
not Tanner, bro. You're like, let's be honest. You put it as A-. This is your stock. Like, just be honest with yourself.
You know this better than everybody. Wall Street expectations are a bunch of people that come up with a number. And
EPS in line, 1 cent. Revenue beat by 1.04%.
Hold on. So hold on. So all the SoFi Wall Street analysts that you shit on every day, Now you're saying that the Wall Street analyst, because Grab came in $1 million above it, is so horrendous because Wall Street somehow understands every business correctly. Because Wall Street understood Palantir and Hood phenomenally when it was at $7. Is that your argument?
They understand this business like to a T.
But how do you know
they
that?
got this business pegged down? They Wall Street guessed the numbers for Q3, and they pinned it on the head.
Yeah, I think you guys are maybe coming at it from a little bit different angles. Tanner is more looking at relative to where expectations.
Yeah, I'm not saying the company
and then Amit knows the company at a very deep level, and so both can be true. I side a little bit more with Tanner here, but I will say one thing, that PayPal is pretty undervalued. So,
dude, honestly, the fair value of this company could be $12. I'm not even suggesting it's not. I'm just saying you think that this quarter was exceptional.
Look, let me just make this very clear. I don't care if you like Grab or not. I don't care if you think Nubank.
Of course.
I really don't care. Like we're best friends. I don't love SoFi. I know you love SoFi. Like that. That's not the issue. The issue is you said it's mid, and I know you don't understand the company as well as like the average person understands because you don't care about it, right? It's not your forte. So to say it's mid, and then to say that A- is too high, and then the best reason I'm getting from you realistically is they beat EPS by 1% and that the stock didn't go up, to me is an abhorrent way to justify the argument that it's not an A-. I mean, you have no justification to say it's mid if you don't understand.
I'm saying that like 85% of companies in the S&P 500 beat their estimate. So
again, what does that have to do? Grab is not in the S&P 500, and it's a growth company.
No. I'm saying 85% of companies, beat their earnings. So it's a good way to gauge how Wall Street looks at respective companies and then how Grab did compared to the rest of those companies and their expectations. That's not
okay. So,
I'm not fishing here. I mean, that's how markets.
If Palantir came in at 1.13 billion and grew 59% instead of 63% and had a decent beat, but not a crazy beat like they put up today, would you say that's a mid quarter just because Wall Street had them a little bit higher than? Like, no, of course not. That's not even a way to determine the quarters comparison. Like, I don't even understand how you're making this argument.
But you price in the company determinant of the surprise of earnings. So like,
but that doesn't mean the quarter was mid, horrible, or exceptional. That's Wall Street's reaction and then the stock price reaction. The business is completely different from if the stock goes up or down based on the earnings expectations. Like, okay, hold on. So this is my point. Meta missed EPS by 86%. Was that a mid quarter?
No.
Well, why, Tanner? Because Wall Street didn't figure out they had a $15.9 billion tax charge. So does the quarter become mid because they like?
Correct.
I don't see how you can use that as your argument.
But I would maybe call Meta's quarter an A- quarter.
I would say it's an A+. They're a 30% EPS beat to you. It's like, why do they get the minus? Give me one reason they get a minus.
Yeah.
Wait, who beat EPS by 30%? Who beat EPS?
Oh, Meta grew top line revenue 26%. EPS would have been a beat by 9% if not for the $1 billion tax charge, the $15 billion tax charge. Ad impressions are up 14%. Average price per ad is up 10%. DAUs are up 8%. What are you talking? Why was this an A- quarter? Because the stock went down 10%?
Well, I just think the range of scale between 0 and 10, like I could go from an F, D, C, like the range of ranking a company doesn't go from A- to A+. Like I'm looking at the whole grand scheme of, hey, where in all the letters could I put them? If I'm looking at Meta's quarter.
So you're guessing, basically.
No, I'm not guessing. I'm saying I would pick Meta's quarter over Grab's quarter. But how can you put them in the same letter grade? How can you put those two companies?
I'm saying Grab's an A- and Meta's an A+. And if
that's
you're
in the
saying,
same letter grade.
Okay, so hold on. So now Grab has to become a $2 trillion company to even have a chance.
No, they have to grow as fast as a $2 trillion company in a emerging market as a tech company in two of the fastest growing markets that you could be in. No, that is crazy.
No, but I would agree with that. My point is not growing at that top line of, so they grew at 22% instead of 26%. So that 4% difference justifies a fundamental downgrade on a quarter. Like, I don't understand why that's not the right criteria to make the argument.
I'm curious on this. Like, is part of the I know you didn't want to talk too much about Grab, but
well, we got into it.
So is
well,
this so,
people have popcorn tonight, so at least we're putting on a show.
So like looking at the revenue, I just have pulled up here. I'll just throw this up. Why not? Okay. So this doesn't have the newest quarter's revenue, but we can see that there was a reacceleration. This is against a higher comp, so maybe that's part of the reason why you're grading it as it is, because they did a significant step up last year, and we can see that it seems to be a acceleration of revenue. And so I don't know as far as seasonality or everything. I don't know the business, but are you seeing this as more kind of an inflection point, and that they'll just continue growing top line revenue at a faster rate? Or are you just like, I'm just kind of curious.
Yes, I'm seeing them as a company that's worth 15 billion enterprise value, doing $3.5 billion of revenue, likely going to be doing 4.5 next year, probably going to be doing closer to 950 million in Q4. And there's a lot of nuance to analyzing that has 7.5 billion in cash, and that hit all their metrics up and to the right on every single level. So when I see something like that, and then Tanner says it's mid, again, it's not even being emotional that he said it's mid. I'm just like, well, how do you even say it's mid if you don't understand all the? That's like me saying Nubank's quarter is mid because I thought one metric was bad, or because the stock was flat. Or like, no, because Nubank absolutely crushed it.
But you could look at other companies in the fintech or self-driving space and then say, hey, you know what? Like, I don't know PayPal very well, but they're growing a heck of a lot slower than these other businesses, or something like you could put up an argument.
Yeah,
right?
But then if I said it's mid, and then Roy's like, well, a mid, did you look at X, Y, and Z? And I'd be like, no, Roy, because I don't know PayPal. Though he's like, well, mid, then it's probably not as mid as you think, just because you're looking at the top line numbers.
No, yeah, I know. I'm just saying, I just don't know why, if you're going to go out of your way to buy, and I'm not even saying Grab is a bad company or anything like this. Like it might do awesome, but you look at a name like Nubank, which you're also taking those international risks. How do they even compare?
Tanner, I don't know, because I haven't gone through Nubank, and I'm sure Nubank is a great company. And
I'm trying to save you. I'm trying to get you over to the good side here.
Okay, so, now we gotta clip this for a year from now. Tanner says he's trying to look. You might be right about this. I don't know. Maybe I'll be publicly wrong about this. I'm just saying there's a lot of nuance to understanding this business. Maybe you don't think that's the case, but
no, I'm not. You're right. I don't know the business as well as I should.
But that's my point. That's what, so when you say it's mid, I'm just like, okay, you're making a very generic statement based on looking at a few numbers when you don't even know what the core metrics stand for, like MTU, which is not your fault. It's just you don't care about it. But so giving a opinion on it that is negative without looking at the internal dynamics of the business, I mean, someone will argue and say, well, no, I think based on the expectations, based on the growth trajectory, I think an A- is very well warranted. And they deserve that. I mean, like what? It's a C+ quarter? It's a D quarter? Really? For a company that
I thought you were going to say like C, I thought you were going to say like a B or something. And all this just spiraled out of control. All I said was I was surprised that you put the highest letter grade in front of,
Look, if the stock was 725 right now, you might not be even arguing with this, but it's not, right? So, like, I get it. It's based on the price reaction, but. Yo, Chris and Steve, I got to end this because I have to go to sleep. So we're not extending this any longer because I really need to go to bed. But yeah, this was a fun conversation.
Maybe next time. Well, no, it'll be after Robinhood earnings. Maybe a couple times from now we can bring him on and do a big Tech Bros thing. So.
No, we should. It's a fun debate. It's a good debate to have too. Like everyone should be questioning their thesis. And the amount of times I had to go through this with Palantir at 6, Tanner had to go through this with SoFi at 7. Like this is the dog days of being long on a name, and it's the fun of like, can you defend it, and then can you be proven right over the long term? We see what happens.
And more likely than not, I'm gonna have to end up buying at 12. I mean, we've done this before, so. Like, I'm stubborn. I need a little time to be convinced.
Which works out well.
For the next, or it's a horrible opportunity cost for the next year. I mean, like it's one of the other, but that's the fun of just like publicly putting out all.
You could just say it's PayPal.
Dude, I think that's gonna make a move. I don't know when. I don't know what the hell they need to do to make a move, but I think eventually it'll make a move.
Yeah, I think Q4. We'll see, but yeah, earnings is fun, guys.
Earnings are fun. All right, thank you, everybody. Appreciate it. Love you all. We'll be back. We'll cover Robinhood Live on Wednesday. So 3:30, I think we'll be live. And hopefully we get a good quarter and we can break through all-time highs on Hoodie.
Shopify tomorrow, ladies and gentlemen.
Oh, that's a big one.
Huge name for me, second biggest position. So going to be watching that.
Great company.
All right. Good stuff. Thank you, everybody. We'll see you guys on Wednesday. Bye, everybody.
Bye, guys.